All right, guys. So this video, right? Of course, I'm making this video. I don't have any case studies. I'm bored, and I just wanted to give you guys the shit. So this one shot, one kill, right? This model, which I'll have complete over the course of the next month. However, this is for the trader that does not want to be locked into the screen every day. All right. So maybe you've mastered this whole algorithmic principle thing, institutional order flow, and all that stuff. However, you don't really want to deal with the noise. All right. Some of us lack the engagement. Some of us just would rather more peace within our training. So um, basically, this is one shot, one kill. Means you're literally looking for one opportunity, one overall opportunity throughout the whole week. And the basis of this is understanding what the higher time frame draw is, right? So your higher time frame draw, and obviously all of that, there's the factors of that are institutional order flow and understand which side of the curve I'm on. So market maker, buyer sell model, and if anything else pops up, I'll implement it. But however, for example, let's say we're in the market and let's say we have this range. I'm going to draw what we're seeing on EU. So let's say this is the range, right? Quarterly chart. We see this range and we see the premium array. Okay. And on this is a month, this is a monthly chart. And then we're seeing price on a weekly chart, price all the way up here, right? 3 drives into the array. We have that intermediate term high, and then price is turning around. Okay. So now when we zoom in, what starts to happen is we begin to notice that the draw of liquidity for each day, right, has primarily been previous day's low, right? And ultimately, the draw of liquidity for each week, actually, let me just draw weekly candles now. Each week is previous week's low, all right? So, in understanding that each weekly candle has had, you probably have an 85% chance of each weekly candle having a bearish close, right? And you understand where the draw is. Okay, that's the only thing, not the only thing, but the most important thing in regards to this model. All right. So if you know what the draw is, then obviously you know what your protocol is. So in this case, we would be saying that the protocol is open, high, low, close. All right. Now, remember, when we say open, high, low, close, when we're thinking about intraday perspective and we're literally in the battlefield, right? Every day as price is printing, we're literally trying to trade this entire sequence. All right. One shot, one kill is literally you catching this portion of the anatomy of that candle. All right. So you're allowing yourself, so think about these two candles. All right. These two, actually, no. Just think about this whole entire candle. All right. Because what this is going to create from that wick down to this high, down to that low, right? That's the range. Okay. So, and then let's say price comes off and that week closes right here. All right. Now, with that week, that week that we just left, let's say that we have a premium array. Okay. So basically, we're getting ready to walk into a new week of trading. Right. All right. So we're getting ready to walk into a new week of trading, right? And this is the opening price for that week. So you've already outlined that the draw of liquidity is previous week's low. All right. And you're not really concerned with all of the noise on the intraday chart. You're not really concerned with the lower time frame entry model, right? However, you're using the same principles in terms of framework, but you're a lot more patient and you're only waiting for this open, high, low, close. Remember, when we're saying open, high, low, and then close, this is nothing but a market maker model. and you're catching the smart money reversal. All right. Now, so with this one shot, one kill, this move here is your one shot, one kill. All right. So we're coming into this week. This is the weekly open. And let's say Monday pushes here, right? Gives you that, Z day type of scenario. And then you see Tuesday push up, engages with the array, and you're not even really concerned with the lower time frame entry model, right? You're looking on a 1 hour, 1 hour chart, and you're waiting on that 1 hour change in state of delivery, followed by maybe a 15-minute IOFC, right? Or this could be 4 hour to 1 hour. All right. So what you're looking for is you're looking for that move here. Sorry, should be a green candle. So you're looking for that move here. All right, we're tapping into the array, right? Maybe we leave rejection blocks, which is a very good sign. We go here, here, right? And then you just got your change in the state of delivery. All right, so price just moved through this candle's low. Then we're gonna just redraw this shit. All right. All right. So that's the change in state. Right. So once again, remember you had difficult. You had Monday's trading was here. This is Tuesday's trading, right? Monday kind of set the stage. You understand what the draw is. All you're waiting for is that 1 hour change in state of delivery, right? You can also go to 4 hour. Just got to put the pieces together. You take your entry. At most, you should have about a 20 pip stop, right? Now, I wouldn't really say more than that. And you understand, you can place your stop in here. You're literally taking that execution from this point, right? And you're just riding the wave. You're riding the weekly range expansion, right? So Wednesday may go here, right? And then we make it to this low, right? And then you at that point you're done, right? You're holding that trade the entire week. You're done. That's one shot, one kill. All right. So to show you guys some examples, and just remember, I don't have real case studies. I did not plan to make this video just yet. But we'll come back and let's look at pound USD for the last 3 weeks, because it provided some really good opportunities in terms of this model. Okay. So if you look here, yeah. All right. So around this time, mid to late August, we were kind of seeing the right pictures for him. All right. And we understood that price should be bearish. Okay. And we were waiting on bearish opportunities. So here's a week where we would be expecting open, high, low, close. All right. The array being this previous day's high. Okay. Monday opens, we get not really a Z day, but I guess we can potentially call it a Z day because price really doesn't go anywhere. But we get kind of that Z day. This is all Asia, right? And then this is that protractionary period in London. And then we take out this previous day's high. All right. Now we take the previous day's high. All we're looking for is this higher time frame institutional order flow to confirm itself. You can also use a 30-minute chart. Right? 30-minute charts kind of hold a pretty good amount of weight also. All right. So if you look here, and just like MJ does, you can confirm model X on the lower time frame also, and just kind of let that order flow. If you just think about it like this, just letting that order flow kind of, it's like a domino effect, right? So you have that change in state. It's the same idea as model X. It's just a double confirmation in terms of order flow. That's all our entry model is. It's just throwing in an additional piece of the imbalance, right? But when you get to a higher time frame, you don't necessarily need the imbalance piece, because what you have to understand is that within this leg and then this leg of price, there are lower time frames and time frame imbalances within that are being validated. All right. So once again, here's that double confirmation, right? One shot, one kill. You were literally just waiting on the smart money reversal. So here's that open, high, right? And then you'd understand wherever that previous week's low is, which is right here. Price is drawing on previous week's lows. And then there you go, right? That is a 1 to 6, right? Zero thinking. And then there's another piece that I'm kind of seeing right here, but I'll get to it in a second because we're gonna have a week coming up here where Monday kind of sets the high. Let me take this out. All right, that was that. All right, so here's another scenario. We're understanding that the draw is previous week's low. All right, we have Monday. All right, and obviously the very first thing we want to do, we want to outline the current range, right? So if this is our range, here's Monday here, here's Tuesday, right? We aren't really getting the you know, the reversal type of scenario that we want. All right, because even if you look here, that would be your CSD, but we never really get that institutional order flow confirmed. All right, so then Wednesday trades higher, and then what it actually does, it takes out this high. All right, so then we look at the parent price wing. Okay, so price has just gone and taken out a previous day's high within this range. And then here's our entry model, one shot, one kill. So actually what we're getting here is a Wednesday high of week, right? So Monday, Tuesday, Wednesday for this model that's where you're going to make your money at, all right? Here's that liquidity sweep, price trades into here, right? And we go here, order flow is confirmed, really at this point, and then you get into your London session and, there's potential to just take entries off of this, right? I place mine up here on this, but you could have done this also and, leave your stops in there. And you have relatively equal lows here. Maybe you can attack this low. You wouldn't get it on this week. Maybe you hold, maybe you don't. However, you guys should be seeing, right, what the assignment is here. All right, so then this is the next week, right? We failed to reach this week's lows, these relatively equal lows. We come in on Monday. This was actually a bank holiday. All right. And honestly, on this week here, you wouldn't do anything here. This is hindsight. What I would expect here is that, and then that we didn't really expect that type of move. So now, what happens if Monday sets the high of the week, right? And it becomes very obvious that we're not going to trade back above this level. What you do is the one shot, one kill becomes OTE. If Monday gives you a heavy expansion, then now you're moving to like a Tuesday, Wednesday type of scenario, right? Tuesday here, Wednesday here, right? It doesn't have to be that. It could simply just be OTE from Monday's range, right? If you don't get the movement on Tuesday, and you can see here we have, we come up here, we sweep that high, we have the very first CSD, but we never get that institutional order flow confirmed. But then look at what happens on Wednesday. Once Wednesday runs out that high, I think we had S&T here, I'm not sure. Once Wednesday runs out that high, then here you go with your CSD, order flow is confirmed, right? And even on 30-minute imbalances are being closed. And you enter, stops they should really be able to go inside just above the up close candles high. And then on this week, we were attacking I think it was 24800. All right, so this would have been an easy target. And, if you leave some on, fine. But that's the easy 1 to 3.5 without any additional thinking. All right. So now getting into this week, you guys can kind of see where we're somewhat setting up for that same type of scenario. All right. Um, we have up close candles up in here, and this has to be a 4 hour maybe. I'm not sure why I have this blue line here. Okay. All right. So on a weekly chart, it's not officially an inefficiency. Um, However, we could see price getting us out of this area. All of this is pretty much balanced within here. This point here would be fair valuation, which we've pushed to. So at this point, we'd be looking for potential S&T at the highs. Maybe EU takes out the high and GU doesn't. However, we understand that there is an obvious draw. These are relatively equal lows. All right. So going into Tuesday, guess what? We look for liquidity sweep and then that change in state, then to send price lower. Right. Market maker sale program. Boom. Consolidation. This is that offset accumulation, right? And then more accumulations in here. We may have a smart money reversal, or price could come here one more time, and then we see it fall off. All right, but I just want to give you guys insights into this model. I'll make a much more a better video than this with more case studies, more examples, and yeah, we'll see if we can make something happen from this. So thanks, guys.